Hello and welcome to Startup Street. I'm Shruti Mishra, and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Cloudkeeper, provider of comprehensive cloud cost optimization services, has acquired WiseOps, an AI automation platform specializing in AWS cost and usage optimization. The acquisition for an undisclosed amount was via a mix of equity and cash.
Customer relationship software firm DevRev has raised $100.8 million in a Series A funding round from Khosla Ventures and others. The latest funding round has brought the Palo Alto-based company's valuation to $1.15 billion, marking its entry into the unicorn club.
The IPO-bound OYO has raised nearly 1,040 crore rupees in its Series G funding round. This follows an earlier raise of 416.85 crore rupees in the same series and concludes the round. The additional fundraise values the company at the same valuation of $2.4 billion.
Wealth and asset management startup Neo Group has raised 400 crore rupees in a fresh equity funding round led by Japanese lender MUFG Bank along with New York-based Elucidine Capital. Peak 15 partners, which had invested around $35 million in October last year, also participated in this round.
Pernod Ricard's legal head in India has resigned, a key departure at a time when the French liquor giant faces many legal and regulatory headaches in the critical Indian market, Reuters reported. Bijoy Roy will join Google in November as its top India counsel.
Those were the headlines that we're tracking for you this evening. But on What's Brewing today, e-mobility startup Kazam has secured $8 million in a Series A3 funding round led by Vertex Ventures Southeast Asia and India. The round also witnessed participation from Avana Capital, Ulterior Capital, and other notable investors. The company had previously raised $11.4 million from Avana Capital Advisors and others. The fresh funds will be used to bolster its technology and product teams, enhance platform offerings, and expand its market presence. Joining me now to discuss this further is Akshay Shekhar, the co-founder and CEO of Kazam, as well as my colleague Shruti. Akshay, thank you so much for joining us on Startup Street today. You know, you essentially offer several charging products and services for electric vehicles, right? So take us through your key offerings and how are you taking on competition? Because this space has quite a few players today.
Thanks, Arundhati, for having me here on the call. So, yeah, I think there is a lot of competition, absolutely. But I think it's a very large market that we're solving. I think last I read that it was a $130 billion market. And charging is just one small bit of it. And even in the charging space, specific to 2-3 wheelers and buses, there are quite low players actually in the market. There are hardly 3 or 4 that you can name in the market. The market is very large, still growing. So we have a very large piece to actually capture in this space.
All right, Akshay, let's get to the fundraise now. This is Shruti quickly stepping in. You've raised $8 million in your Series A3 funding. Take us through how you plan to spend the funds.
First of all, we're going to expand in the market. So Kazam is a very collaborative player in the market. We work across the largest vehicle OEMs in the 2-3 wheeler space. We work with large e-commerce players. And we would grow alongside with them as they expand number of pin codes in the market. So getting market access to these pin codes as we launch city by city is one of the biggest things that we will solve for. Second is we want to solve on products. So we want to expand our product offerings. I think we're just launching one of the fast chargers which charge 2-3 wheelers in 15-20 minutes. And this is going along with, again, the large vehicle OEMs. And we would want to double down on building newer products in the market. Whether it's our SaaS offering for managing and controlling energy or vehicle management, along with our charge point access that we're already offering. So 2 pieces, 1 product, and second is market access.
So market access and product is what you're focusing on. But, you know, speaking about the product that you said you're going to launch, you're going to launch the LEV-DC, a fast charging option for 2-wheelers as well as electric 3-wheelers, right? And it can charge an electric scooter by up to 80% in 20 minutes. So take us through the tech and how many have you deployed so far, or are you still yet to deploy these? What's the plan on this front?
So I think the key differentiation here is that it's truly interoperable. So any brand that can actually come to this fast charger and get charged. So whether you have a Hero or a TVS, and you can go to the alternate charge point and you can start charging it. So that's the true nature of this technology innovation that we are really solving for. Some of the products are actually out. There are close to 30 odd fast LEV DC, that's what we call it in Kazam, is already out in the market. you can expect anywhere between 300 to 400 charge points in the next 12 odd months in the market, where we've already secured orders for this.
All right, like you said, Akshay, you've already secured orders. Can you take us through the kind of sales you've seen so far? And also, if you could take us through the kind of revenues you're making, where are you currently at? Where do you hope to end the year with? And what's profitability looking like?
Kazam is very frugal. I think we were not able to raise a lot of capital in the early days because of the whole market conditions that have been there. And I think that ingrained a lot of, things in us, characteristics in us that allows us to be very, very frugal as we build the company. And, the revenue for us in the last 12 odd months has grown 8x in terms of our monthly revenue. Today, we stand anywhere between $3.54 million of ARR. And I think we will close this year by close to $5 to $6 million of ARR. So that's the kind of growth that we're actually seeing. And this is all on back of all the collaborative approaches that we have taken with vehicle OEMs and our fleet partners in the market.
Right. And Akshay, what about profitability?
We are not yet EBITDA positive, but we are tending towards that. And hopefully in the 12 to 14 odd months, we should be there.
Okay, so 12 to 14 months for you to get there. But, if you could take us through your expansion plans, right? You're looking about at 10% of your revenues coming in from global markets. So which countries do you hope to expand into? Where are you currently at? And which ones are you looking at that are looking interesting for your product?
I would actually want to first add that even in India is a very large market. So we're already close to 5,000 pin codes. And I think we grew from 1,000 odd to 5,000 in the last 7-8 months. So continuing to grow into multiple pin codes. So we would be roughly around 10,000 pin codes in India. And the second piece that in the markets, international markets, we have SAARC market that we would get very immediately with our OEM partnerships, whether it is Sri Lanka, Nepal, and also Eastern African markets. We also have certain oil and gas companies that are helping us launch in the Southeast Asia markets, typically Malaysia and Thailand.
All right, Akshay, one final question before we let you go. You've partnered with Big Basket, Zip, Mahindra Logistics and other third-party logistics. You've claimed to have facilitated 1 million transactions. Like you mentioned, you also have some OEM partnerships as well. Elaborate on these plans, the kind of distribution you're hoping to make.
I think Big Basket is something that I'm really proud of. We grew, it was our first anchor customer and large customer that we onboarded. I'm proud to say that we're there in almost 95% touch points of Big Basket today in their warehouses, where we allow third-party logistics players to come and charge their vehicles. And this has basically created a network effect that where we work across all large e-commerce players today. So that is one piece that is taking up shape and allowing us to penetrate deeper into the pin codes. On the vehicle OEM front, especially on the three-wheeler side, our product gets bundled along with each vehicle with Mahindra and Bajaj at this point of time. And as they launch new cities, we would want to expand alongside with them. They are also launching newer markets to sell their EVs, not just the names that I mentioned, but others as well. And we partner along with them to get into these markets to get access to that.
All right, Akshay, thank you so much for taking time out and being here on Startup Street with us. But we wish you all the best on your journey going forward.
Thank you so much, Arundhati and Shruti. Have a good one. Bye.
Thank you.
All right, moving on. Renewable energy solutions platform Fourth Partner Energy has raised $275 million from global impact investors IFC, ADB and DEG in its third big-ticket funding round. The consortium's investment will infuse capital to fund Fourth Partner Energy's business expansion plans, which include a target portfolio of 3.5 gigawatt of renewable energy assets by 2026. To talk to us about the road ahead at Fourth Partner Energy, joining me now is its co-founder and executive director, Saif Thorajiwala, and also with us is my colleague Ritu Singh. Saif, welcome back to Startup Street. I believe World Bank's IFC is investing $125 million, while ADB is infusing $100 million, and Germany's DEG is at $50 million to complete this round of fundraise. What does the backing of your new partners mean to you? You also have, Norfund and TPG on board. So tell us, with this fundraise, what is the current valuation of the company as well?
Yeah, first of all, thanks, Shruti, for having me on the show. So our business model essentially is that, we build and own our own assets, renewable energy assets, and supply energy to our CNI clients on a long-term PPA basis. And this tends to be a asset-intensive, capital-intensive play. Right from our inception in 2010, our focus has been to bring high-quality institutional investors, invest in the sector in India, and make them attractive returns. So this particular investment, which happens also to be one of the largest equity investments for all the three institutions, IFC, ADB, and DEG in the Indian renewable energy sector, is one step forward in that direction. We also have had, of course, like you mentioned, TPG and Norfund as our investors earlier on. In terms of the valuation, I would say that all the investors now are actually minority investors, but as a consortium, overall, they will own about 90% of the company.
All right, still not a word on the valuation. Saif, hi, this is Ritu stepping in. You have an installed base of about 1.5 gigawatts of green assets, and you're looking to commission the first phase of your, wind solar hybrid project in Karnataka later this quarter. Talk to us about whether you're, one, on track in terms of the timeline for delivery, and secondly, the kind of impact you hope to make with these.
Yeah, we are very much on track. In fact, this is it'll be one of the, first of its kind ISTS project for the CNI in India. It's a fairly large project, even for us with the installed base of over a gigawatt. Essentially, what the initiative by Government of India to allow for ISTS projects for CNI, it allows us to do 2 or 3 big things. Check the boxes. One is it makes India as a single market for us, because we can generate energy at the states where which are resource rich, essentially. So, for example, Karnataka is very rich in both solar and wind resources, whereas if our clients are based in states like Punjab or Uttarakhand, which are not having great wind potential, it allows us to supply energy from Karnataka across the country anywhere. The second thing it does is effectively allows us to supply energy to a lot of our clients. In fact, have multi-locational facilities, single clients spread all across India. It allows them to have greater flexibility in terms of, the energy sourcing, because they would be essentially sourcing it from one particular location.
Sure.
We're very much in track. Phase 1 should be getting done next month. And more importantly, we are also on track to complete the entire project by June of 2025.
Okay. Saif, that's good to hear. And like I mentioned earlier, you plan to use the fresh funds to expand your offerings, increase the supply to commercial and industrial consumers across India. Elaborate on these plans. And in fact, again, like I mentioned earlier, the firm targets a 3.5 gigawatt renewable energy asset portfolio by 2026. What makes you bullish? What are you betting big on?
Yeah. Essentially, like I mentioned, capital is a raw material for us. And the good thing about this round is a lot of it is going into committed projects. More than 50% of our business comes from, existing clients. And the, paradigm shift which has happened in the past, I would say 3 or 4 years, is it's not only about the cost of power. A number of our clients want a larger share of renewable energy. Most of them are signatories to RE100. They've taken pledges to go net zero by a certain year. And, there is a big rush to meet those targets. So effectively, a lot of this 3.5 gigawatt is under the belt. The projects have been identified, and it is giving more of the same to our customers. One area which kind of stands out is there is a lot of hybridization which happens, which uses the complementarity between solar and wind in terms of generation. And we are also looking at providing round-the-clock power, which is effectively bringing storage into play and taking our clients net zero, in the near future.
Well, Saif, if you could quickly take us through your, growth numbers, what the financials look like currently, what sort of targets you have, both in terms of your top line and your profitability.
Yeah. So this year we should be clocking about 2,500 crores of revenue, and next year the plan is for about 3,500. So, about a 30-40% growth. In terms of our asset core revenues, we should be crossing about 800 crores this year, which is about $100 million EBITDA in terms of EBITDA. And next year we're targeting a 50% growth in our generation revenue. So that's how we kind of measure our business.
All right. Saif, India's renewable sector is expected to attract an annual investment of $25 billion through 2030, aided by the government's clarity and stability in the RE policy. The commercial and industrial consumer segment has been rapidly scaling up and attracting significant investments in this space. So tell me, what is the potential you see for FPEL going forward?
Yeah, I think where we are, we've just, scratched the surface. It's just the tip of the iceberg. Effectively, if you see, there is a shift, a secular shift from fossil fuel to renewable energy. A lot of our clients want to be in charge of their, energy destiny, and they want to source green directly from the source, and not from an intermediary, which utilities tend to be. So one is in the existing pie itself, they want more renewable energy. And apart from that, we are seeing some big sectors coming in which are going green. You take e-mobility, that will increase the consumption of electricity manyfold because you'll move from fossil fuel to electricity there. That sector will open up to take up more green energy. We have the green hydrogen sector, which will again be very, very promising. We have data centers, a lot of them, asking for green energy because effectively they have commitments with their clients. Say, for example, an Amazon or Google have made commitments to the end consumer saying that we'll be using green energy, and they have their own commitments to be given by the data center. So we're seeing, a two-way shift. One is transformation of the existing, pie into green, and these new high growth sectors coming into play. So I feel even 25 billion will not be enough.
Sure.
We will have to see a lot more coming through.
All right, Saif, we've completely run out of time, but thank you very much for speaking to us here on CNBC TV18.
Thank you. Pleasure being here.
On that note, it is time for us to head into a short break. But coming up next, specialty chemical manufacturing startup Scimplify bags $9.5 million in a Series A funding round. We tell you how the firm plans to use the funds on the other side. Stay tuned.
welcome back. Specialty chemical manufacturing startup Scimplify has raised $9.5 million in a Series A round led by Omnivore. Founded in 2023, Scimplify offers a science-first, end-to-end contract manufacturing platform for agrochemicals, pharmaceutical APIs, and flavors and fragrances. With this new round, it plans to double down on its R&D capabilities and add more geographies. For more on the funding round and the company's growth roadmap, I have with me its co-founder, Sachin Santosh, and also with me is my colleague, Arundhati. Sachin, welcome to Startup Street. Thanks very much for your time here. Start by giving us a very brief sense of what Scimplify does in simple terms, and what is the size of the opportunity that you're chasing in the India market?
Sure. Thank you so much for having me. So I'll tell you a little bit about Scimplify first. So Scimplify is a science-first specialty chemicals manufacturing platform, which means that we are a full-stack platform. We do everything from R&D to manufacturing to actually supplying the goods to every part of the world. So a little bit of background about how we started also is that my co-founder and I have been spending the better part of the last decade across various manufacturing setups across the country. Specialty chemicals really stood out to us because this is one of those industries where the output is driven by small to mid-sized factories, which have excellent chemical capabilities, but significant capacities are there to increase their revenues. By increase, I mean more than double their revenues over the next 3 to 5 years. So that's where we sort of realized that, while the demand was also coming in thick and fast into the country, thanks to geopolitical shifts, as well as the China Plus One shift, we decided to take a science-first approach by doing our own R&D. So we set up our own lab and got in scientific leaders who develop technologies for key products. And this is what we take as a combination of the R&D as well as demand and global outreach to these factories. And these plants are more than happy to sort of partner with us to utilize these capacities. Overall, the global market is about $800 billion, and the India market itself stands at about $50 billion, half of which is exported to various parts of the world.
Right. And speaking about that, Sachin, how large is your customer base, both in India and outside? And who are some of the prominent names, if you could tell us a few, and at what rate are you growing your customer base annually at this point?
Sure. So we've served about 200 customers so far. And in terms of the number of factories that we work with, we have 30 factories which are actively producing technologies that we brought to them. In terms of the kind of customers, it completely depends on the segment. Primarily, we focus on pharmaceutical and agrochemicals, other segments being industrial chemicals as well as flavors and fragrances. Typical customer profiles on the pharma side, for example, would be people who manufacture APIs and formulations, is where we supply to them. On the agrochemical side, we also have a larger full stack offering where we even make formulations and supply to brands as well. So that's a typical customer profile for us. We've actually served a lot of customers in the first 6 to 8 months of our business within India. But over the last couple of months, we've served customers from Spain to Japan from Taiwan to New Zealand, and we plan to expand that a lot further.
Could you give us the split between agrochemicals, pharmaceutical APIs, and flavors and fragrances in terms of your revenue? And, quick word on the funding that you raised of $9.5 million. What is the plan in terms of deployment when you talk about expansion in new geographies?
Sure. So today, in terms of revenue, I think 50% roughly comes from agrochemicals, about 30% from pharmaceuticals, and the rest is a combination of industrial and flavors and fragrances. In terms of the funding, we have raised $9.5 million, primarily 2 areas of focus for us. One is on the R&D side. We've received really good feedback about the lab and the setup that we have. So we plan to invest in a process lab in terms of scaling up engineers as well as getting more scientific leaders. We're also expanding the infrastructure we have in Hyderabad. And secondly, this market, like I said, has always been operating on 50% of an export customer base. So we plan to build physical presence in all of these countries by expanding to newer geographies.
Right. So expanding to newer geographies also on the cards. But, with shifts in global supply chains moving away from China, how is Scimplify positioning itself to capitalize on this trend? And what challenges do you foresee in scaling your operations globally at this point?
Yeah, I mean, absolutely. The customers today, if you look at developed countries or as we call it, regulated markets, they are looking for a partner who can give them. So we map out manufacturers across the 3 C's is what we call it: chemistry, compliance, and capacity. So a manufacturer today, if let's say an innovator in the US is looking to find a manufacturer in India, it would take them 6 to 12 months to identify a factory, audit them, and to actually start the first batch of production. What we enable for them is a quick, fungible manufacturing setup, which can get get them to market in less than a month, and which is what we enable across key APIs intermediates. And as markets are moving faster towards, let's say, off-patent molecules, it's an interesting time that we live in. We have more than $200 billion worth of products that are going off-patent in the next 5 years. And India's strength has been off-patent molecules manufacturing. So what we enable is them to is for the customer to find the right partner to let them go to market in 1/10 the time possible, possibly.
Well, I know you only started in 2023, and I don't want to keep beating about the financials, but in terms of the projections, because you're just starting out with a smaller base, what sort of growth do you envisage? And, you gave us a rough split of the key segments from which the revenue is coming. Which one is growing faster than the other? And, what does that mean in terms of your bottom line?
Yeah, I mean, pharmaceuticals has been growing the fastest for us right now. Quite excited about that segment myself. I think right now in the last 8 months or so, we've seen our revenues grow 10x. This year, we are planning to exit at about a $50 million ARR. And in terms of profitability, actually, we were really close to profitability before we closed our Series A. But like I said, with all the factories and the customers that we were getting in, we decided to sort of double down on this. And we see that, within the next 10 to 12 months, we will be reaching a much larger scale with profitability as well.
All right, Sachin, we're completely out of time on the show, but thank you so much for joining us on Startup Street today.
Thank you. Thank you so much for having me.
Well, with that, it's a wrap from Ritu, Arundhati and me on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Yeah, I can hear you.